Hello, beautiful people. Welcome to another brand new episode of the ITU Forex class. In this week's edition, we're actually going to be talking about how to backtest automated trading strategies. Okay, so if you've been a regular to the ITU Forex classes, then you've probably attended the class where we talked about how to backtest, that's manually backtest your trading strategies using trading simulators and all of that. Okay, so in this week's class we're actually going to be looking at how to backtest automated trading strategies. Now, before we dive into the practical aspect of today's class, we'll first need to kind of really understand the difference between automated trading strategies and manual trading strategies. Okay, so the difference is actually in automation. It's actually in the word. It's the dead giveaway there. It's automation. So when you're trading with a trading strategy, okay, it's assuming that trading strategy is a mechanical trading strategy. So most of the times there are distinctions between trading strategies. We have what is known as the discretionary trading strategies and mechanical trading strategies. Discretionary trading strategies most of the times are trading strategies that require some input from the trader in the sense of his experience, his intuition, his feel about the market. Okay, so it's not just about when ABC happens, you do XYZ, for example. With intuition, with discretionary trading strategies, most of the times you're going to have a vague or kind of like a guideline of rules that will determine how you identify low risk high probability trading opportunities. But when it comes to it, you not just base your trading decisions off of just those rigid set of rules. Most of the times your experience, your time on the market, your intuition, and all of those are going to influence your trading decisions. Okay, this is talking about discretionary trading strategies. Now, mechanical trading strategies, on the other hand, they are just like the word implies, they are mechanical in nature. So when you're trading with a mechanical trading strategy, and for example, let's say the rule of the trading strategy says that if a moving average crossover happens, you should buy. And if a moving average crossover to the opposite direction happens, you should close that buy position and you should sell, open a sell trading position. Then it doesn't matter whether you feel good about the trade. It doesn't matter whether you think the trade signal that you just saw is close to resistance, or it does not, whatever your thoughts about that particular trading signal is, it doesn't matter. With a mechanical trading strategy, when you see that trading signal, you ask no questions, you just take the trade and you move on. And personally, having done this for years, I have found that, especially with traders who are struggling to become profitable, mechanical trading strategies that are proven to be profitable tend to help them become consistently profitable traders a lot more than discretionary trading strategies. Because when you're trading with a mechanical trading strategy, there's less room for you to go on a tangent, and go on a tilt, and just hide behind the veil of, it's the decision I'm taking is based on discretion. So let me give you an example. Let's say you have a trading plan that you've stayed and you've designed. You have your technical analysis that tells you exactly when to buy and when to sell, and part of that is your trading plan tells you how much to risk and when to take a profit and all of that. Now, when you're trading with a discretionary trading strategy, if you have a trading signal that's been prompted and you take that trade and it turns out to be a losing trade, then you see another signal and you take that one also and it turns out to be a losing trade. Fast forward to like 5 trades or so, and let's say the same thing keeps happening. With a discretionary trading strategy, it's easy for you to see the next signal after the streak of losses that you've had, and then you'd hide behind the veil of, okay, something doesn't look too good about, or something doesn't feel right about this trading signal, and so I'm going to skip this trade. Okay, and that's the beginning of the end, because when you start skipping trades in trading, obviously, no matter how good your trading edge is, you are not going to know exactly which trade is going to win and which one is not. So when you start skipping trades because you don't feel good about it, then that's just a recipe for disaster, because you're going to start skipping the good trades, which will in turn make back most of your losses and even maybe give you some profit and some. But when you're trading with a mechanical trading approach, it doesn't matter whether the last 10 trades were losses or last whatever were wins or whatever the case might be. When it signals that you should take a trade, you ask no questions and you just take it. Okay, so this is kind of like a long-winded explanation of mechanical trading strategies versus discretionary trading strategies, but there's a reason behind this. And that's the reason behind this is because when we're talking about trading or backtesting a trading strategy that is automated, the rules of that trading strategy, usually they must be mechanical rules, because when you involve discretion in a trading strategy, it's hard to code discretion or experience or whatever, your intuition into a trading strategy. And that's why most of the times you'd notice that when a trading strategy is being automated, it's usually a mechanical trading strategy. Okay, so moving on. Now that you understand what mechanical trading strategies are, let's look at how to test one, for example. Okay, so for you to test a mechanical trading strategy, the first thing you would need to do, let's assume you're using the MetaTrader 5 platform. It doesn't really matter. MetaTrader 5, MetaTrader 4, the concepts are the same. Okay, so what you need to do is just go to the navigation menu, and then under the Views tab, click on Strategy Tester. Okay, now this is assuming that you've already gotten your expert advisor, your trading strategy coded into an expert advisor. So if you've gotten it coded into an expert advisor, before you even reach this stage, it is expected of you to install that code, that expert advisor into MetaTrader. And for you to do that, all you need to do is just click on File, click on Open Data Folder, and then once you've opened that, you'll now go to MQL5, click on MQL5, click on Experts, then paste your expert advisor here. Okay, once you've done that, you're good to go. Just refresh under the expert advisors tab, and you see your expert advisor there. The one I'm using here is the one I got coded for my trend trading strategy. Okay, so it's called TrendRide, and basically it's just the one we're going to be using for this sample simulation. Okay, so here you could use custom data, you could use whichever one you want to use. It doesn't really matter. Okay, but if you want the quality of your backtest to be like 100% or whatever, it's highly advisable that you used custom data from sites like Tick Data Story or all of those websites. Okay, a quick search on YouTube will show you exactly how to do the historical data import and all of that. Now, once you've done this, so that this backtest doesn't take forever, I'm just going to make it a quick one. Let's just backtest. Let's see, this year, and let's start from what month should I say? Let's start from let's just make it just a backtest for 1 month or so. So here, and then here we would say till today. Okay, do we want to test it for now? No, we just want to keep things simple. Okay, and then we want to start with a $100,000 starting balance on this account, and then it's going to be a USD account. The leverage for the account, we're not going to change that. We're going to leave this as is, and then we're going to tick on visual mode, because if you don't tick on visual mode, then you're actually not going to see the backtest that you're running, how it's taking trades and all of that. Okay, the trading strategy. So if you want to see it take those trades live, then you have to check this box. But if you don't mind for that, then you can uncheck it and you could just start your backtest and all of that. Now the next tab is the Inputs tab. This is where you're going to select the settings for the particular expert advisor you're going to use. Now, for most of the expert advisors that you're going to be using, this tab, the setting for this particular tab, is actually going to be different. Okay, it's going to be different. So it's going to be based on what was coded, based on what was set. Okay, so now for my particular expert advisor that you're seeing here, what we have here is the expert advisor. It has a setting for selecting the time frame of the trading strategy. Okay, the daily time frame. This is all time frame specific. This is all strategy specific. If you're using a moving average crossover strategy, your settings here is going to be different, and that doesn't really matter all that much. The point is, this is where you're going to select the input settings for the expert advisor that you are testing. Okay, and then once you've done all of this, you'll now click on the start menu. Okay, the start button to start your simulation, where the expert advisor is going to go and download the data for that particular backtest and all of that. So I'm going to click on the button here so that it's going to start that. Okay, as you can see on the screen, the backtesting session has begun. Okay, and basically this is one of the trading strategies that I use to trade the markets. Okay, I've talked about this trading strategy quite a lot of times on this ITU Forex classes. It's a trading strategy that uses multiple time frames analysis to identify low risk high probability trade setups. Okay, so you can see, because if this was a manual backtest, I would have to identify the trade setup, then I would have to place those trades manually and then manage them manually, do the lot size calculations and all of those things and place the trades. Okay, but since this is an automated strategy backtest, you'll notice that this particular setup that I'm seeing, the trading strategy is actually taking it based on the rules of the backtest. So let me quickly add my template to this chart. Okay, so this is the, I think this is the daily time frame, if I'm not mistaken. Yes, this is the daily time frame. Then this is the 4-hour time frame. And basically what we have here is, you'll notice that the direction of the trend is bullish on all three time frames, and that's why this trading strategy actually placed a buy stop pending order here with a stop loss here, and then the trade got triggered by the market. So now you can see that the trade has been taken, and you can see it's running in profits, or it doesn't matter, profit or loss, the trade is floating in either one of those. Now I can increase or slow the speed of the simulation. So now you can see that when I clicked somewhere around here, it reduced the speed of the simulation and it's now going a lot slower than it used to. But if I click somewhere here, you'd see that the speed of the simulation has increased. This is the 1 hour chart. So if I was actually really trading the 1 hour charts in the market, it would take 1 hour for each one of these candles to form. But because this is an automated simulation, you can see that it's taking me barely less than a minute, okay, for like 4 or 5 candles to even form. So it's going to help me. One of the big benefits of this is that it's going to help us to test the performance of the trading strategy, take a ton of trades with it within a very short period of time, and see how the strategy performs. Okay, so now if I was to increase the speed more, you'll notice that, look, you see the trade that we just took here in the beginning was actually a winning trade. It doesn't matter. Again, remember, I keep telling you that it's not the individual outcome of the trades that you take, it's the collective, because trading is a game of probabilities. You're not going to win every trade setup you take. So based on the rules of the strategy, remember I told you it's using multiple time frame analysis, so I'm pausing it here so that you would understand it clearly. Okay, now you'd see that on the daily time frame, the direction of the trend is bearish. The reason is because these 3 moving averages that you're seeing on the chart, these simple moving averages, they are all 60 period simple moving averages. They are added to the daily time frame, the 4-hour time frame, and the 1 hour time frame. If price is trading below the 360 period simple moving averages on the daily time frame, and it's doing the same thing on the 4-hour and 1 hour time frame, then the direction of the trend is bearish, and so we're only going to be interested in taking short trades on the lower time frame. Okay, while if the opposite was the case, that price is trading above the moving averages on the daily time frame and the 4-hour and the 1 hour, we're only going to be interested in taking long trade setups on the lower time frame. Now in this case, you notice that since around here, when price made this crossover from being above the moving averages to being below it, we had price now being bearish on the daily time frame, and then the same thing can be said for the 4-hour time frame. Price crossed and closed below. That's after we took this losing trade. Price crossed and closed below the 3 moving averages on the 4-hour time frame. And so when we go to the 1 hour time frame, you can see that this was where everything lined up. And based on the trading strategies trade entry rules, once all of the 3 time frames, price is trading below all of the 3 moving averages on all 3 time frames, then we're going to place a sell stop pending order at the most recent candle, confirmed candle that had a down fractal. This is my strategy. That I'm just telling you the rules of the strategy and what the EA, the expert advisor, is actually looking for to place these trades for me. Okay, so we had this setup here, and then our stop loss was here. The entry was here, sell stop pending order, and the stop loss was around here. And then we are aiming for a 1:2 risk to reward ratio on 80% of our risk per trade, and then the remaining 20% we'll let it run with we'll let the profits run, and then when the profit target is hit, we'll move the stop loss for that portion of the trade from the original level where the stop loss is to break even. And that's exactly what you're seeing here. When we go to the history of the trades that we took, you'd notice that for this one, it actually hit its profit target, and that's because when we took the trade here, we were risking 1 to make 2 on the 80% portion. Price hit the profit target here, and for the remaining portion, price moved. When that price hit the profit target, the stop loss moved from its original position to break even, and that's why the other position is still open. Now, when I click on play and move speed, hasten the speed a little bit, you notice that this trade is still running. The only thing that will make us close this trade is one of two things: either price crosses and closes above these moving averages, or it goes on to hit this break-even stop loss. And now that's what we're waiting for. So if I was trading this strategy manually, this is what I'll be looking at the charts to see. But since this is automated and it has already been coded for me by a professional coder, you'll notice that now it's the EA is doing everything for me automatically. And you see, once the close happened, it closed this trade for me and we're in profit. Now we have another setup here, and then it took the trade for me, and then here you see it closed the trade with a loss, because that's how it's that's the rules that were designed for the EA to identify low risk high probability trade setups for me. So basically, in a nutshell, when you're trading with an expert advisor, it's usually that you're going to just have a trading strategy that you've probably tested, and you know the rules for that trading strategy, you know what you're looking for, and so when it's coded, it's just automating it in such a way that you don't need to stay in front of your charts every single day for you to identify low risk high probability trade setups. The EA is going to look for the trades, place the trades how you would have placed them, and then it's going to manage everything properly for you. So you see one big winning trade that we had here, and you see the EA is just taking the trade without me needing to do anything. This is an automated backtest. If I was doing a manual backtest, I would have to do this candle by candle. You can go back to the classes that we've done in the past about manual backtesting. You'd notice that I would have to do it candle by candle, placing these trades, doing the lot size calculation, and all of that. Okay, so if you have an expert advisor that you're using, or that you've had a developer or software engineer or anything code for you that you're using to trade the markets, this is exactly the way you'd use to follow to test that expert advisor. Okay, it's not rocket science. Like I told you, you just go to the MetaTrader platform, use the strategy tester tool, and then set the settings for your indicator, for your expert advisor after you've installed it, and then start your simulation after you've downloaded the data, and that's it. So you see, we have another setup here. It's been taken by the EA for me on my behalf, and then now the stop loss is here, the take profit is way down here. Okay, but the trade has been closed with a small loss based on the rules of my trading strategy. If I was trading manually, I would have done the same thing also, but doing it this way has helped me to free up my time. I don't need to be in front of the charts every single time to look for those trade setups, place them, manage them. I could go out there and do whatever it is I want to do with my time, and rest assured that the EA is going to act as if I was the one there taking those trades by myself. Okay, so you can see this is another setup, again profitable. That's how it works. Okay, so it's not rocket science, guys. Okay, this pretty much brings us to the end of this week's edition of the ITU Forex class. But before we wrap up the class, I would like to, as usual, use this opportunity to invite you guys to test out our ITU suite of bots, which are designed to look for low risk high probability trading opportunities for you on your behalf. Place those trades, manage them, just like we are doing with the expert advisor here. So if you're interested, please reach out to us at any one of our social handles, and we'll be more than happy to help you set up everything in a step-by-step manner and get you up and running in no time, so that you can start earning while you're learning how to trade. Okay, so if you're interested, please feel free to reach out to us on any of our social handles. I'll be more than happy to assist you set everything up and get you up and running in no time. Once again, thank you for taking time out of your busy schedules to attend this class. I look forward to seeing you guys in next week's edition. Have a wonderful rest of your week, and God bless you all. Cheers.